Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I'm the aggressive growth stock strategist here at Zacks. And I've got two more stocks for your aggressive growth radar screen. And you can see I'm wearing the red jacket today. I'm getting a little hyped up for this big football game. Ohio State Buckeyes and the Indiana Hoosiers. Indiana hasn't beaten Ohio State in 36 years, Jay tells me. Let's hope it never happens again. All right, let's go to the screen. I know you guys are all excited about another name, but we're going to wait for it. Fortinet, FTNT, is a software security name. It's a Zacks rank #1 strong buy. And I got a B for growth, not an A, but that's still a strong growth score and a very weak value score. And you know how I like to see strong growth, weak value, because it tells me right away I'm on the right path. It looks like the company had earnings right about here, and it was a beat, and the stock shot straight up, coming in a little bit. So now's a good time to take a look at this. $70 billion market cap. You're pretty big up there. And the estimates are already moving higher for next quarter, so we can see that. So I'm sure we'll see that in the numbers, which I haven't even looked at yet. But let's go through it. I go through it with you for the very first time. We see beats, a beat, a beat, and a beat. Okay, if I'm scanning this, I see maybe the fourth quarter has a little bit of budget flush in there. That's a common thing where governments, even private businesses, they got money allocated. They got to spend it. Let's get some more security. So then 43 cents and then ramp up again. And then so next quarter could have another budget flush. Maybe that's a possibility. But as we look at the estimates, we see that's not totally the case, because estimates have gone from 51 to 57. And that 57 would be down from that 63. But then again, there's a good chance they could beat and push it over 63. All right. Next quarter, which would be the first quarter of next year, 47 to 52, 201 to 218, and then 217 up to 232. So we're seeing estimates moving up across the board. You like to see that. Is there growth, Brian? And there is growth. About 11% this year, about 11.6% next year. You're talking about a very big base. And these are, highly contract-driven businesses, so they get escalators inside the contracts. It's going to account for that 1% growth all the time. All right. If I can get, we screwed up here. So you know what I'm going to do? I'm going to do it the old-fashioned way. This is how I do it. I go to the financial overview. Let's take a look at the valuation here. 42 times is a lot for 13% top-line growth. A price to book is outrageous here at 77 times, but this is an asset slim business. Very little replication of the software. That costs very little. And 12 times price to sales. You're paying up. But while you are paying up, you are seeing margins move up significantly, 21% to 25%. So you're paying up, but you're getting something that's moving good. So now we're going to look at our price consensus. And if you look at this stock is just, it didn't really tell you we're all going to die here, but the stimulus sure helped it. The tech wreck of 22 wasn't so bad on it. We've got a little up and down. That could be an earnings event there where they might not have guided right. But since then, that is just a great looking chart, if I can say so myself. And you got good distance here, sometimes not. But, between, you're going to have earnings growth is the idea on the distance between the lines. And we can see the lines keep moving up. That's going to support that stock to keep running. Back in the day, we used to always look at Apple. I'm going to throw this in there because I'm such a nice guy. I want everyone to see APPL. And it used to have lines like this. Maybe I don't know how to type. APPL, Apple. What kind of growth guy doesn't know it's AAPL? Oof. Everyone just collectively breathed a sigh of relief that Brian is not completely messed up in the head. The problem is I haven't looked at Apple in years, but it used to have that sort of nice movement there with the lines, kind of not so much straight lines on Apple, but maybe you're trying to get it back. But talking about saturation, Apple, big play, saturated. Okay, we're not talking about Apple. That was Fortnite. All right, on to the video we all want to see. It's Nvidia. Company reports tomorrow night after the close. It's NVDA, if you haven't ever heard of it before. It's a strong buy, number one. B for growth, F for value. This is a market cap. That's a big time market cap. I'm going to center up my screen so we can see it if I can, since I didn't even know the ticker for Apple. Kind of dummy doesn't know the ticker for Apple. All right, so last time there was a beat, but the stock went down. That's because they talked about the delay in chips, and they were expecting it. So now they're expecting it to come in December, and now we've got a November earnings. So call it what you will, but that has been a solid, steady move. All right, I'm going to give you the skinny here on Nvidia. I have heard, and this is only hearing. This isn't full scoop. I don't really know this. Can't confirm or deny, but they've been working on quantum computing at Nvidia. And a person that is connected with me tells me that it is very, very close, or so he believes. And who knows what he believes? It's one person. In the grand scheme of things, it's nothing. But it is something, but it's nothing. All right. Company also had a little press release yesterday with IONQ, a quantum computing stock. So maybe the fortune tellers are telling us the story. All right, so 40 cents. They're beating the number, but the beats are not quite as big as they used to be over the last year. But they've been crushing it. They've been doing very well. Let's take a look at the estimates. 74 cents, you're just hanging out here. 78 cents to 80 cents for next quarter. 281 to 284. That's not much of a thrilling move. 373 to 392. That could be something. All right. So are you growing those revenues? Yes, is the answer. You are growing those revenues 106% for the full year. That's $126 billion in sales for the full fiscal year. It's up 100%. That is big time. Still expecting gigantic growth of 44% on that to 182 billion. Now you're going to say that's quite a slowdown, but Nvidia has a way of guiding higher. New chipset Blackwell units coming out. We're expecting to hear good noise from them. All right, valuation. You're only paying 49 times for 100% growth. It's worth it. I'm going to tell you right now, that's worth it. Price to book 59 times. I don't know how I feel about that one. Price to sales 35 times. Both of those are a little bit higher. All right, so the earnings report's coming up, but you can see their margins go 53 to 54. If they go to 55, the stock justifies a $155 price in my head, whatever that's worth to you. All right, Nvidia wasn't going to die in the tech wreck or in the pandemic, and that was so long ago. How could this stock have been in the teens? But it's true. All right, 2020 comes along in the tech wreck, and it felt it a little, but ever since then, it has been off to the races with AI, crypto, all of it. That's just a chart. That's just amazing. Everyone knows that Nvidia is going. Analysts have really started to move these estimate lines up, and you can see that. That's great to see. You keep on earning money. It's going to be looking good. All right, the report is coming tomorrow night after the close. It's NVIDIA, NVDA. That's it for this week. Be sure to root for my Ohio State Buckeyes as they take on Indiana. I think my Buckeyes might lose. I'm going to just be cautiously optimistic. All right. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.